afternoon, everyone. We'll get started. Try and quiet down rowdy folk in the front.
Well, at least we're in front.
There's credit union people, you know. It's a wonderful pleasure today to welcome our fourth speaker in a series of speaking seminars that we've been co-hosting with the Dean of the Edwards School of Business, who unfortunately is not able to join us today and sends her regrets. The impetus behind the speaking series was to celebrate and draw some attention to the International Year of Cooperatives and to bring some visibility as well to the cooperatives that are associated with our center and located here in Saskatchewan. Opportunities for our students in the business school to look for places of employment, maybe to build future careers, as we have our example right here. And also opportunities for faculty and other individuals who might be interested in getting involved in learning more about cooperatives or doing research with them as partners and so on. So just a recap of the series that we've had to date. Our first speaker was Kathy Bardswick in October. Kathy is the CEO of Cooperators, a national cooperative insurance cooperative. In September, we had Scott Banda, CEO of Federated Cooperatives, which is a regionally based Western Canada wholesaler owned and controlled by the retail cooperatives of Western Canada. In January, we were happy to welcome the new CEO of Credit Union Central of Saskatchewan, Keith Nixon, and to formally recognize him in that role. And he was here to talk about credit unions in the province. And today we're really pleased to have Ken Kosolofski with us. Ken's the CEO, President and CEO of Concentra Financial. I'm going to let Ken talk a little bit more about Concentra, but it is an organization, a cooperative organization that provides services to credit unions across Canada. It's a national cooperative, nationally incorporated cooperative. And I'm hoping that Ken will reflect a little bit on what the new cooperative banking legislation means for credit unions going forward, what it means for the banking industry going forward generally. I didn't know if Ken was going to answer my question, but I asked him what year he graduated from what was then the College of Commerce. And he probably wandered the halls and looked for his face, and his wife may not have even recognized it. He was pretty young then, I'm sure. 1981 is when Ken received his Bachelor of Commerce and his Chartered Accountant's designation, and went off to work in the health and government sector to begin with before joining the credit union system. And I first got to know Ken when he was the CFO for South Central, and I'm really pleased to welcome him in his current capacity with Concentra Financial. So welcome.
Well, thank you, and good afternoon, everyone. You can hear me all right? Okay. I'm a little nervous up here because 30-some years ago, I was sitting in your chair. And I often wondered what it would be like to be up here standing in front of you. The only difference between that and what I am today is I don't have all the answers. In fact, some of the people in the crowd know more about co-ops than I do. And one of our original board members on Concentra is Carl Baumgartner. He's up here in front, and I'm sure he's going to be marking down all the notes and telling me all the right answers afterwards. So, due respect to him, I'm going to try and explain kind of my experiences in the co-op system. And I'm a relative newcomer. Been in the co-op system for about 11 plus years. So I graduated 31 years ago. That means I spent 20 years elsewhere. And there's a funny story behind that. Because all my life, my wife works for the credit union system. She's also here, so it makes me a little nervous. First time she's ever heard me speak. But she's been working with Connexus Credit Union, Sherwood Credit Union before that for, I think, over 26 years. And she kept telling me, come join the credit union system. And I kept thinking, well, maybe, I'm not sure. Finally, I joined it 11 years ago, and it was the best decision I ever made. So there's a lesson in that for everyone here. Make sure you listen to your wife. So anyway, small crowd here today, which is good because, I mean, stop me at any time and ask a question. I think it's a way to build a dialogue. And I'm hoping that we can do that a little bit here today and learn more about it. I can learn things from you. I'm sure that you'll learn a little bit more about Concentra today, and that's very good. I want to start today talking a little bit about myself and kind of some history that I have in co-op principles. Whether I understood it at the time or not, I'm not sure. And if you looked at the poster that advertised me, it said that I was from small town Saskatchewan, never left Saskatchewan. All my children were raised here in Saskatchewan. All my children are still here in Saskatchewan. And there's a reason for that. When I was growing up in a small town, and I grew up in small town Saskatchewan, southwest Saskatchewan, heart of the grain belt, at best that town probably had 160 people. It's probably down to about 150 now. But there's two things that really struck me. Number one is that every time somebody had a problem back in those days, the whole community gathered together and helped them. Whether it was somebody in the hospital during harvest, there was 10 combines sitting in their field the next day ready to harvest the crop, whether it was somebody that needed money to support a venture that they were doing, the community pulled together. And that's cooperation. I didn't realize it at the time, but it stuck with me. The second thing is that I went through a rite of passage that every child in that community had. And that's when I got my first $5, and I was 5 years old. And I remember walking with my mom and dad to the local credit union and opening an account and buying a membership share. Again, I didn't realize it until years later, but that credit union was the only financial institution in town. And the second thing is my grandfather was a founding member of that credit union. So quite honestly, I come by the cooperative principles from a way back. Even though I might not have recognized them at the time, I recognize it in everything that I do. And part of working with Concentra, working in the credit union system the last 11 years, is it's really given me the opportunity to live those values and actually see them in real life and real action. And the more I see them, the more I get excited about the cooperative system. Lots of challenges in the cooperative system. I've definitely worked on the credit union side for a third-tier organization, but I'll tell you, the credit union system is done very, very well. So I'm hoping to share some of that here with you today, a little bit about the credit union system, a little bit about Concentra. The second thing that I want to do is I want to talk to you a little bit about financial institutions and what's happening in the world of financial institutions these days. And we call them FIs back at home. In fact, when I started thinking about what I was going to talk about here, I thought maybe I'll entitle my presentation Life of Fi, kind of like, the turbulent world of the financial industry, but I'm glad you laughed because I was scared everybody was going to miss that joke. Anyway, I met with my cousin and had dinner with her on Friday night, and she sees Jan Martel quite a bit in the community. So he's very active in the community, and very good on him and very good on Saskatoon to get that type of an exposure. So I want to start talking a little bit about the financial institutions and the financial industry. In the last few years, especially since 2007, 2008, banks have got a very, very bad name because a lot of what's happened in 2007, 2008 is being blamed on the banks. So banks have a bad name everywhere except in Canada. And there's a reason that it's not that we don't have a bad name in Canada, but part of the issue is that we are respected worldwide for pragmatically managing our way through very, very turbulent times. And that is I guess a flower in the bonnet of the financial industry in Canada, which a credit union is a major, major player. The other thing is that the trust of Canadians, the financial institutions still have the trust of Canadians, which is a lot different than in some other parts of the world. Now, you read in the Financial Post every day or pick up the Star Phoenix, Leader Post, depending on where you're from, and you hear lots of doom and gloom. Our interest rate's going to go up. We have too high household debt. The European situation, the most recent situation in Cyprus. The U.S. is going to go back into a recession. You hear all of that. But yet the banks and the credit unions made record profits in 2012. And if you look at the bank's first quarter results, they came out about a month ago. They, again, were record results. But part of that is because we do have a strong economy here in Canada, and our banking system was came through relatively unscathed from the recession the last couple of years. But what it's done is and you'll see it every day in the advertisements you see on TV, is it has actually focused the banks more on domestic operations. They are looking to gain more and more business here in Canada. There's a lot of money to go around in Canada, and banks are looking to grab a hold of that. And you see that every day on the TV, and certainly, I mean, the one that I was watching TV last night, flipping through, TD Bank's on there, and they have an advertisement that says something like, put the human back in banking. I'm going to talk a little bit more about that as well, but what it is there's a race to grab more and more of these financial dollars from Canadians, and that's putting pressure on the credit union system. Because if the banks are looking for more and more money, more and more they don't call them members, they call them clients, it's taking away from the credit union system. And the other thing that's taking away from the credit union system is competition. If I think back a few years ago, and certainly when I graduated 30 years ago, there was no way that I thought places like Shoppers Drug Mart and Canadian Tire would actually be competing for the hearts and finances of Canadians. And they are actually out there. They're a solid competitor. And forget even places like President's Choice and the OK Economies chain, Loblaws chain, but Shoppers Drug Mart has now entered, Canadian Tire. So there's lots of competition out there, not only in the financial world, but it's taking away from some of what's at the credit unions. And I'm going to talk a little bit more towards the end of what I think some of the challenges are for the credit union system as I go across the country and hear their stories as well. And it's going to continue to put pressure on the Canadian credit union system, and that's why companies like Concentra, third-tier players, are very, very important for the credit union system. Because what we can do is we can aggregate the volumes in the credit union system. And I want to explain to you a little bit about the origins of Concentra. We are the only retail association in Canada. And what does that mean? That means we can do business across the country, nationally, which credit unions can't, and we can do it with cooperative principles and values in mind. And what do we do business across country? We could actually do all the business that the banks do. We chose not to do it because we choose to help the credit unions. And we help them in two ways. The first one is to supplement their retail offerings. And supplement the retail offerings means certain things that they can't have the sophistication inside to offer. They don't have the knowledge base to offer. We step in and help them. So we offer a number of personal trust solutions to the credit unions, registered plan products, estate planning, foreign exchange for their members, leasing services for their members, all things that reality a single credit union cannot offer to their members, but we can help the credit union behind the scenes offer that to their members. And it's a good rounded out product for the credit unions because without it, the credit unions couldn't compete with some of the banks that are out there looking for those types of services. The second thing that probably makes us the most money is we are in the wholesale business. And you might say, well, what is that? Well, what it really means is that we're an aggregator. We aggregate credit union volumes. And by aggregating credit union volumes, we have relationships with third parties that are very, very important to the credit union system. And we're kind of, I was talking yesterday to somebody and I said, we're kind of like the head office of the bank for the credit union system. And what we do is we're able to sell loans back and forth to the credit unions, buy loans from credit unions. We're warehousing for all the credit unions. Way we've been able to do that is to take the risk off their balance sheet or move their risk across the country. All good things for the credit union system. We also are able to offer them sophisticated products that they can't develop in-house themselves. So things like securitization of mortgages, which banks have done for years, and the credit union system the last couple of years is really entering into it. And again, with Concentra support, we're able to help them do those types of things. So syndication, securitization, very, very important. We help them manage their balance sheet. And we even have a small consulting arm that helps them manage their balance sheet, but we can offer products and services to help them manage their balance sheet. And you say, well, why is that important? Because these sophisticated products that are offered to the credit union system are things that they need to compete with the banks. So as a third-tier player, that's very, very important for us to do that. And we are not dealing and competing with the credit unions, but we're helping the credit unions. So if there is a retail solution that's provided to their members, Concentra's name's not on it, the credit union's name is on it. So we're in behind the scenes. The other thing that I want to talk about is ownership of Concentra. We're not a traditional cooperative. Most cooperatives are owned by members. The $5 share when you go into the credit union, that buys you a membership share. We're not that way. We're a member cooperative owned by other cooperative players. So we're owned by Centrals in Canada. The last lecture series you had here was Keith Nixon. He was the new CEO of Saskatchewan Central. And we're owned by credit unions, and we're owned by some other third-tier suppliers as well. So we are a cooperative in the sense, but we're owned by cooperative members, not by individual members. And we guide ourselves by cooperative principles. That's what we live by, and that's what we guide ourselves by. And I'm going to talk a little bit more about how we do that as well. Banks have discovered what we've always known, and that's that there is stability in the community and the cooperative economic model. I was at a conference last fall, International Conference of Cooperatives in Quebec City, and you should have seen the strength of the cooperative movement there. And a couple things that came out of that is the cooperative doesn't mean that you don't make money. There's a very strong economic model behind the cooperative system. But we're not, the primary reason for the cooperative system isn't to make money, but we do have to make money, we do have to survive. So certainly we do that. In the 20s, when the stock market collapsed, shareholders and banks lost tons of money. And in the 1930s, the cooperative entities really prospered, and they were integral to the survival of a number of communities out there. And if you look back to the 30s, that's when the Prelate Credit Union, where I'm from, was actually started, and many, many credit unions in communities across Canada and in the prairie provinces when the drought was there and the banks were not to be found when farmers needed money. And you see a lot of that as you look across the country and you hear the older folks talk that are close to retirement or might retire. They have a real affinity to the credit union system because they were there when they needed help. Also in 2008, when the mismanagement of the financial system resulted in worldwide economic crisis, the banks looked to the government for support and bailout. The cooperative sector did not. The cooperative sector could stand on its own, and the primary reason for that is because it is a cooperative entity, it is a community entity, supported by its membership base, does what's best for the community. So 2008, the credit union system actually even prospered, and the cooperative entity did as well. I want to talk a little bit about this slide, and this talks really about total assets versus domestic branches that are out there in Canada. And back in the mid-1900s, credit unions were often the only financial institution in the community. There might have been others, but they were Bay Street bankers, and they were primarily concerned about shareholders. They were concerned about making a profit for their shareholders. But credit unions were concerned about the community and the financial survival of their borrowers. They were interested. They were a cooperative entity. They funded that decision that was made. It was local control, local decision making. And the banks somewhat didn't understand that. And even today probably don't quite understand exactly what happens. We were there to help the farmers. We were there to help small businesses and other cooperatives finance their operation when banks would not do it because they didn't understand the model. Today, you look at it, our profits on the credit union system are returned back to our members, returned back to local charities in the community. We sustain jobs in the community, we build buildings in the community, and we support a number of charitable events that happen in the community. And even look at Saskatoon, you have TCU Place, major arts center in the city, Credit Union Eventplex, which is, I don't think it's called Credit Union Eventplex, that's Regina, but the Credit Union Center that the Saskatchewan Blades play out of. All those have credit union names attached to them. So very, very good. The other thing that I look at is that these credit unions in these communities, and Affinity here in Saskatoon is one, Connexus in Regina is another, they are the heart of the community. And they are heart of the community in Regina and Saskatoon. They're even more so the heart of the community in smaller centers. And a couple of examples that I want to give to you. I travel quite a bit between Regina and Saskatoon, quite a bit actually the last 3 years for sure. And I always stop at Chamberlain. And the first thing I see in Chamberlain is that big Connexus branch right on the main strip. And I often wonder, how is it in a small community like this that a credit union can actually survive? But the credit union can survive because it's made up of the residents of the community. But what would happen if that credit union was not in Chamberlain? What would these people do for banking? Because there's only so much you can do in internet banking. What would they do? Would they have to drive to Moose Jaw or all the way into Lumsden or Regina? Quite frankly, that's not convenient and that's not community. So again, that's credit unions holding the community together. Another example that's a little bit dated, but a number of years ago, the Bank of Montreal decided to close down a number of branches that were not profitable for their shareholders and in small communities, and the credit union system stepped in and took over those branches to make sure that those smaller communities were still supported. Very, very good thing, and again, it's something that people remember because we are the heart of the community. The other example that I want to give to you is Whistler. Whistler Credit Union was started because of a plan that they had to build log cabins in Whistler. And any of you that have stayed in Whistler or been to Whistler, you know how beautiful those log cabins are, and they're very, very successful. The banks would not provide financing because they didn't understand the model. They didn't understand what was happening. Just like back in the 20s and 30s, they didn't really understand farming, and they thought there was no future in farming. They thought there was no future in log cabins in Whistler. But those cabins are beautiful and survive, and the credit union was started in Whistler Credit Union. So credit unions really need to promote their community togetherness, their cooperative efforts, their member attraction. That is what really is, that's what's key to the credit union system. And as I walk across Canada and see what's happening across Canada, I see it even more and more in each of these communities. So cooperatives, they're associations of people rather than capital. And I've got a stat here. There's 1 million co-ops around the world representing 1 million employers, representing 1 billion members. That is pretty interesting. 1 billion members. That is a vast majority of the population of the world. The two most successful North American sports franchises, Green Bay Packers, Saskatchewan Roughriders, are considered cooperatives. So again, when you go out and watch a game, the Saskatchewan Roughriders, and I notice Carl's wearing a Saskatchewan Roughrider jacket here, they are a cooperative. So cooperatives are very good, associations of people working with the community. They offer a unique value proposition, they create and sustain jobs, they support the local community, they provide financial and democratic education to their members, and they're distinct and very important. Go ahead.
Do the Roughriders advertise themselves as a cooperative? I've never heard them say that.
They do not advertise themselves as a cooperative, but they do advertise themselves as a member-owned team, a community team. So they have a form of a cooperative. And it's interesting because it was actually referenced when we were at Quebec. And they said, you know, Green Bay Packers, everybody understands it, but Saskatchewan Roughriders are too. So they do call themselves a community-based team, and they're looking for support from around Saskatchewan, and they do sell membership shares as well. So it is interesting. So banks have also come to the thing that this cooperative model might work, and they're really looking at such initiatives as corporate social responsibility, sustainable businesses, and the environment, and they're really looking to try and get into the space that credit unions have occupied for years. And I want to talk to you a little bit about Concentra's approach to visibility in the cooperative system. As I mentioned to you before, everything that we do is supporting of the credit unions. And we have kind of a three-pronged approach. Locally, in the communities that we live and work in here in Regina, in Saskatoon and in Regina, another big part of our operations, we support local organizations there as well. Nationally, through the credit union system, and through the communities and events that they support, we actually support that as well. And thirdly, I should say, through the Cooperative Development Foundation. That's an international organization that promotes and supports cooperatives and cooperative startups around the world. So we have a three-pronged approach. We bring it all together. We have websites that we advertise it in. We actually have custom systems that deliver advertisement for this visibility, and then soon to be through our social media system that we're developing as well. And I want to give you a few examples of where this actually works for us. Locally, our 280 employees, the majority are in Saskatoon and Regina, but spread throughout the country, have engagement scores that are rival the best engagement scores of, in fact, actually are above the engagement scores of most North American financial institutions, and primarily because people live there and there's a shared and common purpose, and it resonates very well with them when they think about it. So our scores, our engagement scores, are top-notch. The other thing that I want to talk a little bit about is the average tenure of our employees. The average tenure of our employees is 12 years. That beats any public or private sector organization in this country. And all of it is because people like to come to work where there's some principles in behind where they work. They understand the principles. There's a shared vision. There's a common purpose. The cooperative principles underlie everything that we do. So again, they feel at home in this cooperative network. They're part of a group with shared interests, and I think they stay with us longer and give us higher engagement scores for that. One of the things that we've been really promoting in our organization is locally employees, where we allow them flexibility to donate some of their time to local businesses and organizations in town for charitable purposes. The fact of the matter is if they volunteer a certain amount of time, and some of that from work time, we'll actually give that organization or the business a financial a grant or some type of a grant or a donation. That's very good. The second thing is we do a lot of team events here in Saskatoon or in Regina For example, last fall we supported the food bank. All of these types of things bring our employees together. We advertise all of these successes on our website. We also have an electronic newsletter that we use, and also my blog. So we bring it all together, and again, it brings the employees together and helps them feeling like they belong, they're giving back to the community. And that's a big principle of cooperatives, is giving back to the community. So we try and share all of these successes. In support of our national initiative, that's which we've rolled out the last few years. In fact, in 2011, we rolled out a program called Empowering Your Community. And we gave $10,000 grants to initiatives that were basically promoted by the credit union system. So a couple things that helped us do. It helped us support the visibility of Concentra in the credit union system, but it also helped promote the visibility of the credit union and the local community events that they were sponsoring. Since 2011, we've donated over $250,000 to those initiatives. Those initiatives are from across the country. We give away 18 $10,000 awards. We've been getting 30, 40 applications. Our employees actually adjudicate, so they look at the, what actually the application is, and they award those grants to the credit unions to help in their community initiative. Again, something that is something that's being used to promote that cooperative spirit, promote the credit unions, promote the initiatives. And we are once again, just last week, we announced another program for 2013. So our contribution is going to be close to $500,000 in 3 years. So very, very good, and something that the credit union system across the country looks for. So, and very supportive, and we get more applications than we can actually give a grant to. And they're all good applications, by the way. It's a matter of trying to pick the best 18 out of the 30, 40 that we actually get. Internationally, we've committed $250,000 for the next 4 years to the Cooperative Development Foundation Canada's Build a Better World campaign. That's a CDF, and they're a very important organization that Concentra and the credit unions support. And they promote international development of cooperatives around the world. So disadvantaged countries that are trying to promote a fledgling co-op system or build a credit union system, the Cooperative Development Foundation is out there supporting those organizations. Concentra is a very big supporter, along with the credit union system, in supporting Cooperative Development Foundation. Again, shared cooperative principles, things that we can stand for, things that we actually know, things that are standard across the world. We really try to walk our talk. And I want to be fair and balanced here, because I'm talking about Concentra, but the credit union system as well is very supportive of a lot of these initiatives. In fact, in 2011, the credit union system donated $41 million to their communities across Canada. That is significant. That is actually, it's astounding if you think about it, and the size of the credit union system, which we're going to talk a little bit about. They give back to their communities. My point is that a competitive advantage is actually doing things like that. Cooperatives today get engagement through charitable giving among common interest groups. Any financial institution can give money away. That's not the hard part. The hard part is being integrated into the community and making sure that those contributions are very meaningful for the community. And that really multiplies the effect of any donation or any type of help or assistance that you can give to those communities. Earlier I talked about another trend of what's happening in the banking industry, and that's part of what they're trying to be more customer-centric. I used the TD Bank example, and they're trying to focus on a relationship sales building model, as they recognize it's a big differentiator that builds loyalty. And we know that there's a couple of things when people go out and do studies of the credit union system that we rank way higher than the banks, and one of them is the quality of customer service. We are way above the banks on the quality of customer service. They also value for money of the products and services that are received by the credit union systems. The folks that actually are members of the credit union system rank us higher than the banks. And business values and comfort in referrals. And comfort in referrals is referring from one credit union to another. Those are three distinct advantages that we have, and the banks are trying to enter into that field. And we know that there needs to be a balance of membership attraction to support and continue to grow the credit union system. And we have to support our current members that are there as well, but we also have to grow the membership base. And Generation Y is kind of an interesting generation because they are much more supportive than my generation of community. They're turned off by the bank's motive of profits, of money going to down east somewhere and disappearing somewhere in the coffers, which is the shareholders. And they're also interested or wondering why things like fees on every product and service that they get are going up each and every year so that the bank can make more profit. So I think that's great news for the credit unions, because the credit unions have been very good at that. And again, if you're involved in the credit union, you're part of the community, you can actually be involved in some of the governance that goes on with the credit union system. And for the most part, the credit union system makes sense. And some of the younger generation really hooks on to that. And the way I see it is things that are being promoted in some of the conferences that I go to, where they have a kind of a young member symposium. These people are very, very excited about the cooperative movement and the credit union movement. And it's a well-kept secret, quite frankly. Not a lot of people know about it. And so it's great that you people come here to listen to this, but we need more and more young people in the credit union system. We need to build and retain our membership base, and one of the things that I talked about is what about the members that are actually there? And there's a couple of stats that I had to read a few times, and it's really kind of astounding that Canada's population grew by just under 6%, or about 1.86 million people between 2006 and 2011. 18.6% of that population is adult population 65 years and older. In the credit union system, a survey that was done last year, more than 1/4 of that 65 plus, 26.5% are CU members, they're credit union members. And another 20% of those members are aged 55 to 64. So that means that close to half of the members are either at retirement age, close to retirement age, or could elect to retire in the next few years. So we have to provide services and products to those people and help to support those people in what they're doing. You have to make sure that those members are taken care of. That means that there's certain products and services that the credit unions really want and that they need. And part of it is this wealth management services and estate planning. And that's, again, where we as Concentra can help the credit unions with their members. We have an associated company called Concentra Trust. Concentra Trust, the origins of Concentra Trust go back about 60 years. In fact, just a little over 60 years, the old Cooperative Trust Company of Canada. And their purpose really, they've been in the business for 60 years, and their purpose was to do a number of things with the credit union system. Today we provide estate planning, wills, executorship, registered retirement programs to the credit unions. We have relationships with 90% of the credit unions in Canada on those wealth management products. And they're very exciting for the credit unions, and they're very exciting for the members, and it's supporting some of that older population that's out there. It's a highly valued service for the credit unions and substantially growing on our end of the scale, again, as we get older members in the system. Credit unions in and of themselves do not have sophistication to provide the products or do not have the legislative ability to provide them on a national basis, so Concentra can actually do it. We work with credit unions to provide them with this access to these full suite of products, and they pay us for it, and we can make some money on it, but they're also provided with wealth management services. The credit union wins because they're able to offer the members this service, and when I look at the wealth management services and what Concentra actually provides, what would happen if Concentra wasn't there? What would happen to this 46.5% of the members of the credit unions? Well, they'd be looking somewhere else for those services, a bank, a trust company, a lawyer office, all taking membership and services that credit unions could provide to them to some other place. And so, again, it's something that we're very, very interested in making sure that we maintain. In fact, we introduced a program 2 years ago called Executor Ease, where we will help members manage the estate of a loved one that's passed away. All of us are going to have to go through that at some point in time, and it's a service that we're rolling out to that we've rolled out to a number of credit unions, and they're very much interested in promoting it, because what usually happens is an older member passes away. He's got all of his credit union services there, and one of the siblings come in and they actually have a bank account somewhere else at a Royal Bank, CIBC, and they'll move the accounts fairly quickly. The Executor Ease helps the credit unions maintain that account. So it's a very good thing. The larger credit unions have really taken us up on it, and it's a growing product for us and a very profitable product for us as well. I want to reference some research as well, and that's Deloitte last year talked about cooperation among cooperatives, and they were wondering whether the 6th cooperative principle is still relevant. We all know there's a big diversity in size between the large and the small credit unions. But one of the things that really hits home for me is that the banking system assets in Canada are really, for the most part, with the banks. 83% of the total bank assets in Canada are with the top 6 banks. Even the largest credit union in Canada, that being Desjardins, only has 11% of the assets. So the credit union system is very, very small. And so not only is it small from banking asset side, we have a lot of members, 5.5 members. They need to basically continue to promote their services, but they also need to make sure that large and small credit unions continue to grow together, because we cannot lose any of those, not only for merger partners if the credit unions want to do it, but to continue to promote it in the community as maybe the only banking institution that we have. Again, Concentra can help. We're helping on the estate planning side. We do help survival of even some of the smaller and mid-sized credit unions in providing more sophisticated products and services to help them manage their balance sheet on a profitable basis. Again, a portfolio that Concentra can come and help the credit unions and help to at least maintain what they have. But the scale of the credit union system is very small. It's kind of like what I call the best kept secret in Canada. Last year I was at a conference and one of the professors actually started talking about credit unions, and the students in his classroom, this was in Ontario, knew nothing about credit unions. And here in Saskatchewan, you see a credit union on quite a few street corners. In Ontario, you don't. And they were very, very excited when they heard about it. In fact, the class is supposed to go an hour. He said he usually has trouble keeping them in for an hour. He said that class went an hour and a half and he had to cut it off. So they're so excited about what can happen in the credit union system and what they actually can do in the credit union system, and that they can actually be involved, and it's a community organization. They're very excited about that. So again, it's something that we need to build on, and it's something that we really have a lot of room to grow. But scale is not one of our strong points at this point in time. Now, part of the advertisement here was I was going to talk a little bit about legislation and the federal credit union legislation, what that actually will mean to the credit union system. A couple things that I want to tell you just before we start talking. In late 2009, Credit Union Central of Canada, which is kind of the umbrella organization for backroom services for the credit union system, and Concentra formed a legislative affairs committee. And they called upon the federal government to enact legislation that would provide interested credit unions and those desiring to establish new credit unions with the option to conduct the business of a credit union to serve their members and communities under a federal charter. And what does that mean? Credit unions have been created and are legislated by provincial legislation. That means that they cannot operate outside their province. So the big credit union in Saskatoon, Affinity, can only operate in Saskatchewan at this point in time. So credit unions, for the most part, have tried to expand, but they've had to expand within Saskatchewan and probably put some pressures on some other credit unions as well. The federal credit union would allow them to expand beyond their borders, whether expand beyond their borders or merge beyond their borders. So you might say, well, what did the government do? Well, the government introduced in July of last year the legislation under the Bank Act to allow credit unions to come under a federal charter. And really what they did is they took the Bank Act, they put the cooperative principles in there, and they primarily talked about the governance of the cooperative entity. The government of the day realized that the cooperative entities were very strong. 5.5 million, $150 billion worth of assets. Even though scale, that's not big, it's still pretty big. When the government goes and talks internationally and talks about the strength of our banking system, there's lots of countries out there that go, hang on a second, isn't a vast percentage of your population and a lot of your bank assets outside of your control? And yes, it is. It's under the provincial legislation. So again, the federal government felt if they could get this under the Bank Act and they could get credit unions interested in it, then they could be legislated by the federal government as well. Credit unions, to date, right now, it's a very good option for them to move to a federal credit union. And the primary reason behind that is because they can expand their boundaries. And again, because of scale, though, they're going to have to be careful as how they do it. There are a couple of problems, though, with credit unions right now moving to that regime. The first one is regulatory. Concentra has been regulated by the federal government since 2005, and we're regulated by OSFI and by Canadian Deposit Insurance Corporation. Those regulations are very difficult. They're difficult to comply with, and there's no wiggle room. You have to comply with them. Because the province legislates credit unions, they do have regulators that are trying to move to OSFI standards, but it's taking a little bit of time. So various credit unions are at various stages of development, but the regulations are not as strong as what the OSFI regulations actually are. So that's going to be a little bit of a hurdle for the credit unions. The second hurdle is capital. Capital is defined in various ways, but there is a definition of capital under the Federal Bank Act, and under the Federal Bank Act, some of the capital that credit unions hold would not be called permanent capital, and there's certain ratios that have to be met if you want to be a federal credit union. So again, those are the types of hurdles that credit unions face. The other hurdle that they face is that in some cases, the provinces have outrightly guaranteed all the deposits of the credit union in the province. They've either done it through an implicit guarantee or they've actually come out in the press and said, look, if you deposit any money in the credit union system, it is fully guaranteed. Well, under the federal legislation, CDIC only guarantees $100,000 a deposit. So again, a big hurdle for some of the credit unions when they're looking for safety and soundness of the financial institution. So there are some issues out there. But one thing I know about the credit union system, we are very innovative. We are going to be able to find ways to do it. And certainly, we will support the credit union system as they move there. In fact, we have experience, close to 9 years experience under a federal regime, and there's lots of things that we can help the credit unions move to. One of the things, though, that people always ask me when I'm out and about and talking is going, well, this federal credit union, it kind of makes Concentra, why would they want Concentra at the end of the day? And when I started looking at that, and we've done lots of work on this, by the way, so it's not like it's, oh, that's a good question. We've done a lot of work on this, and one of the things that you have to understand is the history of the credit union system. And really, the credit union system in and of itself started back in the 1900s, probably. And it's not really whether the system's going to find relevance of Concentra, because Concentra is going to be around and going to continue to be around. But you got to look at the history of how the credit unions were actually started. And one of the things that that we always look at is how were the third-tier organizations started. And back in the 40s to probably about the mid-1900s, 1990s, 1980s, membership in credit unions and the credit unions grew significantly. And their infrastructure grew significantly in behind it. And they needed third-tier organizations to help support them. So when I talk about third-tier organizations, what am I talking about? I'm talking about the organizations that were set up to support the credit union system. So CUMIS, Credit Union Insurance Services, provided mortgage insurance to the mortgage people that they were giving out mortgages in the credit union system. They provided life insurance, fire insurance, job loss insurance. They supported the credit union system. They had the expertise and sophistication to do that. Other third-tier organizations were like Cooperative Trust, again, to provide wealth management products, registered products for the credit unions, estate planning, executorship. They were created 60 years ago to do that. Again, because you bring it all together, you bring the aggregation of volumes together, it makes a lot of sense. Lots of other third-tier organizations. QITS, which was one of the organizations I started with in 2001, was owned by the credit union system to develop a credit card for credit union members. So there's a lot of third-tier organizations out there. All of them are going to have to look at their structure as they move ahead. And part of the issue of looking at their structure is that they're going to have to determine whether they still have relevance under federal credit union legislation. So two things that are going to make Concentra relevant. Number one, the expertise to provide trust services and some of our retail services in behind. That is an expertise that we have and we've had for 60+ years. Credit unions want it. They don't, at the scale size, they don't have the ability to provide it. The second part of it is that I talked a little bit about 11% of the assets, percentage of the assets. The third-party relationships that we have and that we can bring into the credit union system, most of those third parties do not want to deal with individual credit unions. They're too small. They don't mind dealing with a CIBC or a Royal Bank, but unless the credit union system can bring and aggregate their volumes, they're not interested in dealing with them, and that's what they can do through Concentra. So the sophistication side of the business is very, very important for the credit union system, but they need access to products and services that are provided to larger players, which Concentra can actually do. So just a little glimpse of the federal credit union legislation. I don't know that there's any credit unions right now that are seriously considering moving to it. I've heard a few rumors, and I think we're going to probably see something over the next few years. talk a little bit about the credit union system and some of the changes that we're undergoing in the 21st century, how they interact, the products and services that they offer, how they source some of their back office services, combination of the influences that I've been sharing with you, externally increased competition from the big banks, we know that's there, regulatory requirements. Even if they don't move to the federal legislation, the provincial regulators are trying to tighten up the regulations to make sure that they do not put any undue risk on the citizens in the province. Customer preferences, what they actually need. Need for increased efficiencies, that's something that the credit union system continues to struggle with, and something that places like Concentra and a lot of the third-tier organizations can help them with. Internally, there is an aging technology out there. A number of credit union systems are making a decision to replace their banking system. Scale is one we talked about, and basically the organic growth of members, and that goes back to promoting the credit union system for young folks. And if they're really large enough to act independently, are they going to rely on the collaboration and cooperative principles of the cooperative system? And I believe they will, and that's something that's pretty basic to most of the system. Deloitte did a study, and they talked a little bit about the cooperative system, what's happening in the credit union system, what's happening with the credit unions, what's happening with the centrals, which are kind of the second-tier players, and actually what's happening with the third-tier players. And they suggest that system partners are not going to be able to rely on the goodwill anymore to sell their products and services to credit unions, and they're going to need to compete on price and services to remain viable. And that, again, is what Concentra is doing each and every day. And there's 4 things that they talked about that they can prepare for it. And that one is developing an executive strategic plan that caters to the changing 2-tiered credit union landscape. And what they mean by 2-tiered is that they believe that over the next 10 to 20 years, there'll be large credit unions, and there'll be a number of small niche player credit unions. So they need to be able to cater to both of those events. Our strategies, our marketing strategies, our promotional strategies, and working with the credit unions, we have a different plan for smaller credit unions than we do for larger credit unions. And we've been able to segment the market, and we're working on that, and then we've been working on that for the last couple of years, so we're well prepared there. They also talk here about moving from a cost-plus or cost allocation models to true market-based pricing so they can remain competitive against non-system competitors. We found out very early in the game, even before my time, that you can't just say, that's what it costs us and we'll add a profit margin to it. People demand more, credit unions demand more, and they rightfully should demand more. If you've got a good relationship with the credit union and they buy a number of products and services from you, there should be relationship-based pricing. So we are moving to relationship-based pricing. We have moved for a number of credit unions that buy a number of services from us, and that's what that's talking about. You can't just say, here's our cost, add a percentage to it, and then we're gonna do what we can for you, because credit unions will not accept that. Seeking new revenue sources outside the credit union system is an interesting one, because it's part and parcel of our third-tier players. Do they really want to do that? Because in the case of Concentra, we have powers that we can actually accept deposits, do mortgages, do direct loans to customers. But we don't want to be doing that. So what we try to do is we've tried to build our expertise inside and leverage some of what we have to help support the credit union system. And in some cases, we do have to get revenue sources from outside. So the leasing services. Most credit unions do not have a leasing service, and in order for the leasing services to be a viable operation to us, we do help support outside vendors in their leasing operations. But again, the primary purpose of that is actually to support the credit union system. And for the most part, we do not use our retail powers unless the credit unions ask us to do that in dealing with their members, and we're usually behind the scenes. Exploring partnerships and alternative delivery with non-system players, that is a very, very important principle for us. That's something that we've really developed over the last 3-4 years, and it helps us to bring sophisticated products to the credit unions to help them manage their balance sheets. Things like syndication, securitizations. There are big third parties out there that really would like to deal with the credit union system but are not interested in dealing with individual credit unions, but are very interested in dealing with Concentra because we can aggregate volumes. So we've got some very good partnerships out there, more to come, and we're bringing them to the credit union system. One of the things, an advantage of a place like Concentra, is that we have flexibility to deal with credit unions on different bases. A lot of times centrals don't. They have to provide standard services to their credit union clients. We don't. We can actually provide different services to different clients, different services to different size, different services meet on their needs, and that's a huge advantage for us. A couple things that I've garnered over the last 3 years going out and talking to the credit union system, attending a variety of conferences, and I want to leave you today with a bit of a summary and some general feedback about the credit unions that I've heard and I agree with. And a lot of that was culminated in this conference that was held in Quebec that was worldwide attended on cooperatives. But the primary advantage for credit unions is that they have an emotional engagement with their members. I'm back to that again because I think it's very, very important for the credit union system. We are all linked by shared cooperative principles and values, and our governance practices are participatory. They're not profit motivated, they're participatory motive. Credit unions should tell their members why they should trust them. And never discount that, because there are many, many reasons why the members should trust them and many reasons why the members need to get involved in the affairs of the credit unions. And that trust factor is a huge factor today. We've heard, we've seen what the bad press that the banks are getting. We continue to see bad press that the banks are getting even in Canada. Credit unions do not get that bad press. And credit unions, we need to sell ourselves a little more on the trust side because it's something that separates us from the banking system. The other thing that credit unions need to do is they need to be more open on their strategic planning process, and many of them are. And we certainly are moving to that field with our customers. But again, opening up their strategic planning process. What do potential members want to see from their credit unions? It's very, very important. I don't remember the last time I ever got invited by a bank to talk about their strategic plan. But credit unions can do that. They work in the community. They can open up some of these meetings to members and potential members. And again, that's part of the community building that they actually do. The other thing that I want to talk about is some of the challenges in the credit union system, none which are insurmountable. Credit union systems have survived 100 years plus. And it's primarily because of things that they can do, and they find simple solutions because it's developed in their community. So a credit union in Toronto, Ontario is much different than a credit union in Saskatoon, Saskatchewan, much different than a credit union in Prince George, BC. And the primary reason is because they're community-based. But there's a few things that credit unions have to realize, and one of them is this intercooperative interaction that they have among each other and among cooperatives. It needs to be there. It needs to be very important because of the scale size. So they have to make sure that they continue to support what's being built for the credit union system. The other issue is innovation, and we do have a lot of innovation in the credit union system, and we need to bring it to market really fast. And part of it is the products and services that people want and need. We need to bring those to them as quickly as we can, and we need more of an entrepreneurial spirit. Just because you're a cooperative does not mean that you don't have a bottom line and you don't have an economic objective. The strongest cooperatives in the world are very financially sound and stable, and the credit union system is as well. We need to continue to promote that, and we need to continue to work on that. The other issue that's very, very difficult for credit unions right now is efficiency. And I showed you the chart about domestic branches and the size of bank assets. And part of the efficiency issue is that there's a lot of branches in very, very small communities. And we need to be more innovative in how we provide services to them. And efficiency is going to be bothersome for credit unions for a while. They are going to have to make some tough decisions, but they will make them, and our efficiency level will come down. So credit unions, for the most part, are probably running an efficiency level at about 70%. Banks are usually running around the 50%. Not a big deal because we're not profit motivated, but we do need to continue to look at and determine what is best and most efficient for the credit union system. The other big issue is succession planning. It's not only succession planning for people that work at credit unions, but it's succession planning for our members. How do we actually bring the younger members into the credit union system? And I talked a little bit about that before, but even to bring in new employees into the credit union system, young folks that really want to work with the credit union system, that know the story, or starting to build some of the history in the credit union system. And one thing that I heard last fall at a conference is hire for the soul, train for the role. And to me, that was very, very important because hiring for the soul is exactly what credit unions and the cooperative entities can actually do. The values and principles are very, very well laid out. They're very, very good for the credit union system, and it's something that really that we can sell for the credit union system, for the members, and also for the people that work there. And we can usually train them for the role that they actually have, and that's where we will be able to promote the credit union system. So just like some of you here today, your commitment to the Center of the Cooperative Studies is important. Your contributions help to pave the way. And it's important that leaders in today's market listen to your thoughts and ideas now, not 10 years from now. And so especially the younger folks here, I'm very interested in your questions. So thank you very much for listening to me this afternoon. I will take some questions. Go ahead, Audrey.
You touched on your hiring and the need to hire for the soul. And I was at a conference, the Build a Better West conference here in town, and Paul Martin was talking about how Van City is a very sophisticated process for sort of sorting out the people who are on side with the values. Does Concentra, have you thought about that? Do you do that when you're, even when you're bringing interns in to do work, if you have that kind of program?
Well, certainly it's something that's very important to us. And everything that we do, the Empowering Your Community programs, the training that we do, we really promote the cooperative principles and the credit union values. For example, since I've been there, this year we're holding our third staff conference. We hold them about once every 18 months. The big part of the staff conference is educating our employees on the credit union system. So we usually bring in general managers from credit unions across the country to talk about what their objectives are, what resonates well with them, how they're building their business, and so that they can understand the credit union system and the cooperative principles. It is at the forefront of everything that we do. The Empowering Your Communities program, I didn't talk a whole lot about it, but really that's what we look for. What are those cooperative principles, and how does that project actually meet the cooperative principles? One thing I'll tell you is that pretty well every one of the projects meet the cooperative principles. That's what credit unions do out there. And so we're educating all the folks that are there as well. We haven't done a good job, though, when we hire folks, just to ask them, well, do you know the cooperative principles? Do you like that? Do you really want it? So they're gaining it when they come. And, but we realize there's a real huge advantage to talk to them initially as we go, because again, that hire for the soul, train for the role is a very, very important, I think it's a profound statement, to tell you the truth. So it's something that we certainly need to work on and probably haven't done a good enough job on at Concentra. But when they're there, they're very, very much immersed in the credit union system and the cooperative principles, and we make sure of that.
Okay, so this is related to that. You mentioned earlier that, you talk to kids and they don't have any idea what credit unions are about or what co-ops are about, and it's something that we talk about at the center a lot. How do you get into the schools? I mean, you got to get them before they're employees in order to have them to be keen to become employees. Do you do any of that sort of thing, trying to get into the schools to educate young people about?
We do, and and part of the issue is that we've actually had a bursary with the cooperative studies here. Credit unions are trying to do that. I think it's more so in Ontario, where credit unions just aren't seen on each street corner. I think most people would understand a little bit about credit unions in Saskatchewan, especially because over half of our population are credit union members, and that's a lot of young people. But there's all kinds of things that people talk about. So one of the things that was talked about at the international conference in Quebec is that Desjardins, which is a leading player in the cooperative industry, is developing their own school. And so really it's people that are very interested in the cooperative movement that can actually come and get trained in the school for cooperatives. And they rolled it out to the rest of Canada, and there was lots of interest across Canada. And that's the kind of stuff that I think is, the system is growing so much that I think it really needs something like that to bring back in the incentive. The incentive in the 30s and the 20s was quite evident, especially on the credit union side, because people got together and said the banks aren't helping us, and if we want to survive, we got to basically pool our resources and work this out, and they were able to do it. Now it's kind of like that 21st century again, and in that study done by Deloitte, they talk a lot about credit unions and the origins of credit unions and where they're moving to, but it's kind of in one of those aha moments now, and over the next 5-10 years, it's going to be very, very important that people start understanding cooperative principles and credit unions. Sorry, I hope that answered your question. Okay.
My question relates to the members of Concentra. You're talking about credit unions. What's the relationship with retail co-ops, with the cooperators, with the other cooperatives? Are they members of Concentra?
Yes. So,
And what's the services that are provided to federated co-ops and to Saskatoon co-op?
Yeah.
You know, that sort of thing.
very, very minimal, and primarily, and they do own a member. They are members of us, and we do some business with them. But our primary focus is on credit unions. I mean, our byline is empowering credit unions. There's lots of business in the credit union system for us right now, and that's our main owners. I mean, there is some small ownership, not by federated, but by places like cooperators. They own a small membership in us, but our primary membership is with credit unions, and that's primarily who we provide services to. And we're in there. It's empowering credit unions as our byline. So there may be other opportunities to help other cooperatives. And you know, when I had that slide up a few slides before talking about dealing with non-system players, probably in our case it's dealing with, you know, non-credit union players, but still in the cooperative sector, because that's actually where we can play. The way we see it, we're not really good at relationships. We've got about 280 employees to service all of Canada. We're not good at relationships. We can't do it, but the credit unions are excellent at it. And they're the front man. If we can provide retail services in behind, or we can supplement their retail offerings, good, if the credit unions want us to do that. If we can help them with their balance sheet, wholesale management of their balance sheet, moving the risk offer on their balance sheet, that's what we're good at. But as far as relationships with actual members, that's not our forte. One, two, three. Okay, sorry.
Well, you mentioned that Desjardins has their own school,
Yes.
right?
Yes.
What's the curricula for that?
I don't know. I could not answer that question. They do talk about cooperative principles, but the Desjardins model is different than the rest of Canada's model. They're very centrally controlled. Their credit union system are all kind of, they're very centrally controlled with the Desjardins model. And it started back in 1900, and it's a much different model than we have in the rest of Canada. Most of the credit unions in the rest of Canada, all the credit unions are very independent. They're independent boards, independent governance. They can make decisions on services that they want. In Desjardins, it's not that way. Decisions on services, backroom services, are all funneled through a central organization. So they're structured a lot like a bank. Still with the cooperative principles in behind, and still with a model that's been very, very successful. Because if you go to Montreal and Quebec, they're dominant. They're dominant in that province, quite frankly.
Now, has that group in Quebec purchased other investing businesses in addition to MGI?
Well, Desjardins is actually talking a lot to the credit union system in the rest of Canada, because they feel there's synergies to bring the credit union system together. So a few years ago, the combination of Northwest and Ethical Funds, the Ethical Funds were part of the rest of Canada, and Northwest was part of the Desjardins system. There was a partnership developed. So that's one of the things that the credit union systems in both those areas are actually working on. We, as third-tier players, credit unions continue to talk to Desjardins. I mean, part of the issue of being a cooperative is to continue to talk and communicate. And Desjardins and the rest of the credit union system does that. So they have purchased Western Financial Group, for example, primarily for the insurance products, because they really feel that insurance is a growing business, and they've maximized what they can in Quebec and down in Florida. So there are things that they have acquired.
Down in Florida, too.
Well, a lot of Quebec residents retire down to Florida, and they need banking systems, and Desjardins is there. Sorry, you're next, then sorry, you've been asking for a while, so.
Just a quick question, I think. You alluded to your blog.
Yes.
Where do you blog, and who do you blog for?
Well, there's two things. I have an internal blog, which I've been doing probably for about the last, I don't know, 6 months. So every couple of weeks I will post a blog. And so it's more of an internal thing, and it's all about credit unions. It's about success in the credit union system. It's about our strategic plan. It's about successes that the employees had. It's about our Empowering Your Community program, all of those types of things that help promote the credit union system, help to maximize the ability of our employees to deal with the credit union system. We are looking at some type of a social website. Not ready to introduce that yet. At some point we probably will, but not today. So the blog is very internal at this point in time. Sorry, you've been waiting a long time. That answered your question? Okay.
And I have just a question, or a comment and a question. First of all, the comment, you mentioned the executor e-service. Really, I would vouch for that. We sort of had the typical Saskatchewan case where dad passed away about a year and a half ago. Small town Saskatchewan, always had bank there. So when the siblings gather together, it was really nice to have somebody in an emotionally challenging time giving you just some clear advice. And it's really important. So kudos for you folks for what you're doing in that area. The question I have is, I was intrigued by your notion that convenience is actually in-person banking. Because a lot of banks will talk about convenience, so you can sit at home in your bathrobe, you can do all your banking on your computer terminal. But you've got the notion of convenience being in-person banking, so if you could just highlight that a little bit more. Well,
2 comments. Number 1, Executories has been a very, very valuable program to the credit union system. And you know, the way it starts is, here's a card, phone Executories, and an hour of free advice for the folks that are dealing with a situation where a loved one has passed away. So it's been very successful for us. So thank you for your comment. That's very good. No, convenience for everyone isn't the same. Sometimes for convenience for somebody, maybe for me it might be sitting at home in my house coat at 11:30 at night, but not for everyone. And there are times when you do have to go see a bank for a variety of reasons. And it's that kind of thing that I think that's nice to have, that credit union bricks and mortar in your community. Now, are they going to continue to be able to sustain that in the long run? I'm not sure. Maybe it's communities getting together. Before it was the community getting together, developing a credit union. Maybe now it's the region getting together and developing a credit union. I don't know. But there is some pride in bricks and mortar, and there is some people that do like to go to a bank and do like to talk to people. And you know, primarily a lot of the people that we get, or that we see and hear from the credit unions, some of those folks are very, very interested in coming into the credit union and dealing with a person. And that's just preference. So don't force them to where they don't want to go, but there is some justification. First, 1, 2.
I have 2 questions about this. First one is, I saw lots of the co-ops still well established in Saskatchewan, but I don't see many young people. You mentioned about young people come for credit union system, but part of the young people new startup co-op business is, I don't see many things in Saskatchewan. What I see, is there any support program, or if new entrepreneurs start co-op, any credit union have support program? That is one first question. And second is for especially financial low-income family, specifically the Aboriginal people or First Nations, or any credit union has support program or outreach program for that?
Well, I don't work directly for a credit union, but there are a number of credit unions that have support programs for First Nations, for immigrant families, and I think it's just a matter of looking around for those, because they are there. And you know, Affinity does have special programs for certain things like that. I don't work directly at a credit union, so I can't answer you and tell you specifically what. Startup co-ops, there's a lot of startup co-ops around the world, and you don't hear about them a lot because co-ops are well established in Saskatchewan. The rest of the world, it isn't. And you know, if you look at the Cooperative Development Foundation, which we've made a commitment to donate $250,000 a year, that's what they do. They help some of these disadvantaged countries, people that are very poor people, to establish a co-op, and it makes a living for them and their family, and it supports the business in the community, it supports the communities. So I think the cooperative movement is just, it's beyond Saskatchewan, it's worldwide, and you know, there's stats out there, and I cannot quote them because I don't know them offhand, but when I went to the international conference in Quebec City, which was attended from people around the world, you should have seen the excitement of the cooperative values and principles. And the thing that really resonated well with me from the financial side is they said, look, when 2007, 2008, there was no cooperatives or credit unions that were in trouble. They all survived and they flourished because they're part of the community. And they weren't involved in some of these sophisticated products that banks were using to try and make money, that people probably didn't understand and maybe didn't understand as well as they should have. So the co-ops flourished in 2007, 2008. There was government people there from other countries that were very, very, very much appreciative of the co-op system as because of the base of their country. So I'm not an expert on that. I mean, there's other older cooperators here that probably have a lot more of a perspective on that than I do. But from my perspective, that's what I see. You always have the hard question, I remember. So.
Well, actually, one of my questions, I think, is just a technical question. You use some terms about 70% efficiency for credit unions, banks, 50%. I don't understand that, so I'm curious if you can give us a lay person's introduction to that. But then I have a more interesting question, and maybe I'll let you answer the first one.
Yeah, well, I am financial because I did come from the College of Commerce, so I can answer the efficiency question quite easily. It's how much you have to spend to earn $1 of revenue. So if you got a 70% efficiency ratio, that means you have to spend 70 cents to earn $1 of revenue. So obviously, the lower the efficiency number is, the better off you are. If you're running at a 55% efficiency ratio, that means you're spending 55 cents to make $1. So obviously, there's more profit for you at the end of the day. And in the cooperative system, that profit, some of it goes back to the members in the case of patronage dividends, but lots of it gets rolled back to the community. And so again, community support, supporting local hockey teams or whatever, that's very important. And the cooperative model is a business model, and it's a very, very strong business model. So the easy question is out of the way.
The other question's easy too. No, you mentioned that you do some staff training conferences.
Mm-hmm.
And you said that you hold them every 18 months. And I'm just wondering whether you use people from the university or from the Center for the Study of Cooperatives or business school for any of that. And is there a potential role, or are there things we could possibly do together on that?
Well, we could certainly talk offline. I mean, what we've been primarily doing is promoting the credit union system, so this seems to be a good tie to that. What we've been trying to do, the last two conferences, we've been very, very, and the employees, they love it, because we bring in credit unions, we have what we call a fireside chat. So this year we got we got the general manager from Service Credit Union, general manager from Momentum Credit Union in Hamilton, Service Credit Union in Edmonton, and the general manager of Steinbeck Credit Union in Manitoba. We sit them down, and the employees submit questions before the staff conference. So, they give a little summary of their credit union. They talk about how they're promoting their credit union in their community, what their community does with the cooperative principles, and then our employees, through me, ask questions of these folks. And it's been very, very good. So I think we can take it offline, but I think that you're right that there's probably a little bit of a tie in here as well for us.
As you likely know, the current federal government is going to be taxing credit unions. I'd be interested in what credit unions have to say about that. And another question, thinking of the image of credit unions, and this is perhaps a perception, on 8th Street, there is a credit union on this corner and a credit union on that corner. So, I wonder about the image. But a more important question, following up on this whole area of education, does cooperative leadership and management sit down occasionally with the leaders in cooperatives and take a look at this whole area of member education?
Well, that's a three-pronged question, and I'm not even quite sure how to answer some of it. First of all, on the taxes side of it, there's been lots in the press about the taxes and the lack of consultation with the credit union system. I mean, the primary reason for the taxes the way they were is because credit unions were small businesses. And so there's a lot of wonderment in the credit union system as to why the federal government chose to eliminate that over time. So lots in the press. You can read about it. Credit Union Central is lobbying on behalf of the credit unions and wondering why it happened, and hopefully saving some of it. We actually, as a cooperative organization, for a long time, we also had the low rate of tax, but our equity grew too much, and we're not, we've got a partial on it, so we're going to lose it as well. The second question was two credit unions on the corner. Yeah, well, I can't comment on that other than I want to say two things. Number one, it's the same in Regina. We've got one corner, that, 4 corners that have 3 credit unions on it. That's one of the challenges, intercooperation. And I think that's part of the reason. I mean, that's one of the advantages of federal credit union, because if a credit union is wanting to expand, they had to try and move into other areas that other credit unions were in. And I think with the federal credit union, you might see a little bit more of elbow room for some of these credit unions that really want to expand. I have no answer as to why credit unions are on opposite corners. I don't know that.
Well, I heard the members wanted this, so it was done.
Possibly.
I thought that was a pretty good answer.
I can't comment. I don't know. We don't get involved in those types of things. All we're there is to support the credit unions. That's our primary role in the whole thing. But again, I think with the federal credit union legislation, it is going to allow credit unions to expand beyond provincial boundaries. But again, there's a little bit of friction and competition in the credit union system. And that's where I go back to one of the challenges the credit union system has, intercooperation among themselves, and making sure that there's a strong credit union system so that Affinity and Connexus aren't battling with the same members. They really should be looking at getting people that aren't members into the credit union system. And the more exposure, one advantage, the more exposure of Affinity and Connexus, the more people that might be members. So I can answer that question positively too. So.
What's the relationship?
Yeah, sure, go ahead.
Okay.
Sorry.
What's the relationship between Concentra and the Credit Union Central? What are the different roles here?
Well, the centrals were established to provide two things. Trade association services for the credit unions in their province. So that means dealing with the government, dealing on legislative affairs. And the other one is to provide a pool of statutory liquidity to allow credit unions to participate in the payment exchange system across the country. So checks, going between the Bank of Nova Scotia and the credit union system and vice versa. And they needed some stat liquidity from all the credit unions to provide a foundation to allow the credit union system to participate in that payment system. The credit unions centrals, which are owned by the credit unions themselves, are our primary shareholders. They created Concentra, and they are our primary shareholders. And back in the day when there was lots of small credit unions in every province, it made sense for the centrals to actually have the ownership and the stake in some of the third-party players. That's being revisited these days because there's some very large credit unions in some provinces. For example, Service Credit Union in Alberta is bigger than Alberta Central. That's not the way the whole central structure was set up to work, so I don't know what the future of the centrals might be or what their new evolution might be coming around the corner. There will definitely have to be an evolution, but that's kind of how the centrals work in the third. So the centrals are the second tier players, credit unions first tier, centrals second tier that provide kind of those basic services, and third tier provide a number of other things as well. That's as best as I can describe it. Now the centrals do other things as well. Sask Central does other things, Alberta Central does other things, but that's not their primary motive for business. Sorry.
I was going to ask you about your perspective on the tax change, but it sounds like. But on with federal credit unions, if you move to federal, you're going to move from a credit union deposit guarantee scenario for protection to CDIC. Some of the provinces have unlimited, as you mentioned, unlimited coverage. Interested in your perspective, whether you see that. I know it's promoted as a positive, but I almost sometimes think it's perhaps a negative having this unlimited guarantee behind there. I'm curious the image that portrays about the credit union that's protected by that, where there's a CDIC limit of say $100,000, but you've got a CUTCH unlimited guarantee. The credit unions tend to promote that as a positive, that you have this unlimited guarantee. I don't know how, if that guarantee is really based on the government stepping in and doing something, is that actually a positive? Yeah. Is that a positive image to portray?
I don't know. I mean, it depends. It depends on your own personal preference. But the reality is credit unions, some of them are getting very, very big, and even the provinces are going to have difficulty supporting an unlimited guarantee, whether they should or they shouldn't, and whether it makes the credit unions look like small time. I think that's the issue. And most banks out there are CDIC insured. There's ways to have multiple CDIC insured deposits, and there's ways to do that. And obviously, the credit unions can get that sophisticated as well. But the problem is moving from provincial jurisdiction and credit union deposit guarantees is every provincial jurisdiction has different regulations for credit unions, and none of them match up with what the OSFI regulatory regime is. And you know, I mean, I hear all kinds of stuff because we deal with OSFI, they're our regulator, and there's a comment that comes from businesses and from companies like us is that OSFI wants to be the best regulator in the world. And you might say, well, that's unfair to some of the organizations, but it's very fair to make sure that the credibility of the banking system in Canada is maintained. So that's why we're first off the top with rules. That's why there's compliance with rules, because the strength needs to happen in the banking system. So one of the advantages of credit unions moving to the federal is that's the next evolution, is they are now a federal organization. They're just like the banks. They have all the regulations. Their deposits are protected under CDIC. They comply with what's required. And to me, that's the next evolution, especially for the larger credit unions. Back to the study that Deloitte did, they said we're going to end up with maybe 10 credit unions, big credit unions in Canada, and maybe 30 to 40 real small ones that are really based upon, you know, maybe a church or something, so smaller, really small credit unions. That's what they think that the credit union system is moving to. So that's why they talk about, well, what does that mean for the centrals? Well, maybe there isn't really a role for the centrals. Maybe there is, I don't know. What does that mean for third-tier suppliers? Well, they're still pretty important, but they're going to have to pull up their socks too. So there's an evolution going on in the credit union system in Canada. And all provinces are at a different stage of that. And Saskatchewan, to our credit, has got a very strong credit union system, very strong deposit guarantee, and probably our rules in the province of Saskatchewan are closer to what OSFI's are. They're not exact, but they're closer.
Ken, and a very strong presentation. So,
thank you.
I'm representing our Dean, Daphne Terrace, who couldn't be here this evening. So on behalf of, I guess, well, all of you here for an incredible volume of questions. So that's phenomenal. And the courses I teach, it's, if you want to know, is it on the exam? If it's not on the exam, the interest wanes. But here we've had 30 minutes of solid questions from a variety of individuals. So Ken, thank you. We have a small memento of our thanks for having you here today.
Well, thank you.
Thank you very much.
We
appreciate your remarks. Thank you very much.
Thank you. Well, I just want to say thank you to you as well. I mean, I really like to see a crowd. I'd like to have seen even a bigger crowd out here because I am very enthused about the cooperative system and the credit unions, and I want to try and bring that to things like this. So I appreciate giving the opportunity to come out here and speak. So thank you very much.